Hi, welcome to Mark in a Minute. The Broncos won. They beat the Eagles. I can't believe it. The Broncos are a real team. And the Patriots look great. That quarterback is awesome. So, two surprise teams. OpenAI, very creative financing from AMD. Can you imagine, being Google or Amazon, Microsoft, Meta, Elon Musk? You're buying these chips from NVIDIA, begging to buy the chips from NVIDIA, AMD, and they're basically giving these chips away almost for nothing to OpenAI. Basically giving them the money to go and buy the chips from them. Unbelievable. If I was Google as an example, or Amazon, I'd be so mad. I would demand better terms. Okay. So I think you're going to see the margins start to come down for these two players in a big way, particularly for NVIDIA. The cloud probably is lifting now for healthcare. So there was some news last week, and the sector shot up quite a bit. There's a lot of relative performance to be gained off the healthcare space. Market update. Okay, kind of the same stuff we've been talking about, the over-concentration of tech, the high valuations, the lack of liquidity in the overall markets. So liquidity's been drying up. The markets need these rate cuts. And we talked about this the last couple of weeks and had some good charts in our previous updates. If you missed them, you got to go back and check them out, 2 weeks ago. Seasonality continues to be an issue. Generally, we get seasonality, tough markets in August and September and October. We haven't seen that so far. So maybe we get 3 months of negative seasonality all in the month of October. So we're looking for a correction. So could be significant, but at this point, we're looking for a modest pullback in the overall markets. And I think that's going to occur as we start to get some of these tech earnings. And then we think a follow on from the correction, we think that the markets are probably going to go higher into year end or maybe next year. Earnings reports. So the earnings are coming out in tech in a couple weeks. October 21st is when we get the first real tech earnings on Texas Instruments and Netflix. So that's a ways out. And then we're going to have a flood of earnings reports from the technology stocks. This Thursday, we get Pepsi to report earnings. If the stock gets hit really hard for whatever reason, we think Pepsi's a good value. J&J next week, and as well as the big banks next week. OpenAI. Okay, so the deal they cut with AMD, 6 gigawatts of chips. So it's similar to what NVIDIA did. NVIDIA basically was 10 gigawatts, and NVIDIA is investing $100 billion, okay? What OpenAI is doing is they basically get 160 million shares of AMD stock for free, a penny a share. So the stock's at 200, okay? This is what's going to finance the purchase of these chips. So basically, the stock, AMD stock, is 200, and they're only paying a penny a share over time for this purchase. So it's like going to a REIT. As an example, PLD, a big REIT, $117 a share, and saying, I want to buy your properties, but you have to sell me your stock for a penny a share before I'm going to buy them. How ridiculous, right? So AMD stock was up 30% on this news. Unbelievable. So you can see this big move in AMD stock. It is 64%, or was 64% above the 200-day moving average. The stock at the high on Monday was up about 40%. We think it's going to pull back. So AMDD is a ETF. It's the 1x inverse of AMD. Just keep that in mind. OpenAI is really trying to compete with these massive companies like Google. Google kicks off $100 million in cash flow a year. So they have to compete with that. How are they going to do that? So they need to do these deals. OpenAI is a tiny startup, basically. They have a big market cap, but they don't have any money. So they have to create this. If you were Google and the pack, are you going to let this occur? No, you're going to demand the same terms or better. I would. I'd be really mad about this. Somebody at some point in time is going to figure out how to do AI without all these massive data centers and all this energy. So we don't know when it's going to occur. I would bet sometime in the next several years it's going to be some startup that's going to come along. Maybe it's something like DeepSeek, the Chinese company, and have a way of doing this without so much energy in these massive data centers. And probably the computing gets pushed out to the edge. What does that mean? Maybe the PC actually does some of this computing. It takes off some of that computing power or need off the data centers to the PCs and the like. So maybe we also have a software issue. There ought to be probably better software to run these big data centers than the software that was generated 40 years ago. We continue like Marvell, and we don't think it's a table-pounding buy anymore, but we like it. It's done well for us. We bought it recently around 64. Now it's pushing 90. It's broke above the 200-day, so the trend's improving. It's well below its high of 120. But what we don't like, this is the semiconductor ETF. This is on the index. So this is largely NVIDIA and AMD recently pushing this index into a parabolic move. So we think the whole sector has to come down, but we still like Marvell. We think Marvell works from here, continues to work from here. And then Amazon. Amazon in the data center space is the 800-pound gorilla. So they are the biggest by far in terms of market share. And, I've been noticing their ads lately. I think the management team has this kind of, irritation that they're not growing as fast and are probably going to push growth a little bit stronger, pick up some market share. And look at the stock. The stock went through this correction here, right? It broke the 200-day. That's when you would have had to sell based on that moving average. But anyhow, it's done nicely. We've got some buy signals through here. It's pulled back, and it's roughly around 120. This is a good support level for the stock. And if you're a William O'Neill fan, this looks like a cup and a handle. So if you believe in William O'Neill's work, this is a classical sign of kind of this long-term cup and handle stock pattern. And again, AMZU is a 2X ETF. So we think that's interesting as well. So we're looking for a reasonable quarter out of Amazon and then strength as we probably go through the end of the year into next year in terms of their business. The cloud seems to be lifting on healthcare. So Pfizer announced last week that they're going to basically cut prices and use the Trump RX platform to sell their drugs directly to consumers and do other things as well, but bypassing the PBMs. So that's CVS, Cigna, United Healthcare, bypassing those PBMs. They're the middlemen. They take the nice cut, but going around them, and they can bring down their prices without actually having a big impact on their margins. So we think that the healthcare stocks have a long way to go and catch up. So you can see there's about a 10% move here from last week of what Pfizer announced. Lilly's going to be right behind them with an announcement here soon. So we think that the sector is going to act better. Don't rush out and buy it, on this big move up because it's probably going to consolidate some. But we think that the healthcare sector looks pretty interesting for a long-term secular move back up. Jobs. ADP reported last week, because we don't have the jobs report, but ADP is what we're looking at. Negative 32,000 jobs in September. That's a big number, a big loss of jobs. we think it could get worse. So if the government is shut down, for any period of time, for sure the Trump administration is going to take an axe at all these government jobs and permanently reduce staff quite a bit. The markets feel like they're in this melt up phase, okay? So we've seen these in the past. We saw this in 06, 07, and in 99, 2000, we saw this melt up in the overall stock market. Kind of feels like the same thing's happening. Technology is such a large part of the S&P 500, it concerns us. We need the rates to be cut, broaden out the overall market. Maybe the whole market starts to do better in total next year. And then maybe it breaks finally at some point in time, in the distant future, we have finally a bear market. That's what we're hoping, that we get this broadening out and people can maybe reduce their tech exposure some, or let the other groups take some of that weighting in the S&P 500 as they start to outperform a little bit. And talking about some stock updates. So just want to go through some quickly. Anavex, as you know, we like this. Alzheimer's company, filed for approval in Europe. Stock's cheap versus the downside. We think there's 5-10x upside in the stock and maybe 50% downside if it does not get approved in a reasonable time. So quite a bit of upside versus the downside risk. They released last week phase 2 data on the schizophrenia drug. Good data. So this company has a nice pipeline of drugs. Fortress Bio, FBIO, they got a CRL. So this is something that happens. It's been happening more so with the FDA, manufacturing concerns, and we think that the company has resolved the manufacturing issues. CUTX-101 is a rare disease drug. We think that the FDA is very open to getting this drug onto the market, and this issue will be resolved. The stock reacted really negatively to it last week, and it's recovering. We think it's probably going to go above where it was the previous week. So we think that this stock has some upside potential. GRAIL reports data on October 17th at a Berlin conference, and this is their cancer diagnostic for blood, their blood test cancer diagnostic that catches things in stage 1 or stage 2, very early stage in terms of cancer detection. Lots of potential for this company, and I think they'll be illuminated in October. Viking, a competitor Viking got acquired for about $7 billion. Viking's about $3.3 billion. Viking probably has better drugs, better pipeline than the other company. Viking has a MASH drug, fatty liver disease drug, that is much better than what's currently on the market. Madrigal, MDGL, is a company that has approval for fatty liver disease. Viking has a better drug, okay? They stopped it after phase 2 to focus on obesity. I think a major drug company would love to acquire this company and love to see Viking stock go up, maybe in the 60s or 70s or 80s before that occurs, and then get a nice premium. But there's a lot to Viking, and it's a big target for big pharma to acquire them. Veru came out last week and issued guidance from the FDA as to what's needed to get their obesity drug, their muscle-preserving drug, approved. Okay, the FDA said, we want you to go, instead of doing muscle preservation, make it obesity instead. And the hurdle rate, catch this, is only 5% weight loss over 72 weeks. That's such a low bar. So we think it's highly likely that this is set up to get approved at some point in time. But this trial will go probably very well. It's going to take a while, and it's set up to be acquired by somebody. Our best guess is that Lilly would love to own this, as they're having really problems with their muscle preserving drug. It's basically not working. Baba took some profits. This is the AI play in China. Stocks moved up nicely. Just keep that in mind. Still own some, but we took some profits in it. Kimberly-Clark. Okay, this is a really solid blue chip company. We like the stock. The group is oversold. Think in terms of time horizon, okay? Give it a while. You're going to get some nice performance out of this 4% yielding stock with a 17 PE multiple. That's really cheap for this company. Gap adding cosmetics, we think that's brilliant, and we'll start to see that play out in next year. As I mentioned, Marvell, no longer table pounding buy, but we still like it. And then Blackstone's REIT. This is Blackstone's BDC. Met with management last week. We've owned this for a while. We've played it really well. We trimmed it back at higher levels. This is a BDC that's got 11.6% dividend yield, really high quality, great management team, underlevered. What's going on with the BDCs is that rates are coming down, so they're going to largely they're going to have to cut their dividends. So BXSL has some flexibility. They can expand their portfolio to keep the dividend a little higher, or keep the dividend where it is, or maybe not have to cut as much as the group. The stocks come down from 32 to 26. We think it's an interesting level to start adding to this or buying this position. So if you have any questions, come to my website, Patrick Adams CFA, and send me a message. We always appreciate all the nice comments we get. That's really nice. So again, if you bought Marvell on our research, I'm just curious if people out there did. Give me a like, okay? I want to see how many people are paying attention. Take care.